Oh, how the mighty have fallen. And quite frankly, it's not even a result of poor performance, but rather just investor sentiment. Cameco is down over 29% since its all time highs recorded in December. And year to date, it's down over 17%. And that's after delivering pretty well on every bit of guidance they issued, including uranium production and even adjusted EBITDA contributions from Westinghouse. But some bad press on Inkai and China claiming AI only needs a fraction of current AI power levels, and well, Cameco has come crashing down. Just how she goes sometimes. Folks, we're talking Cameco, we're talking Q4 earnings. Let's dive in. Cameco in the fourth quarter reported top-line revenue of $1.2 billion, which was a 40% improvement on a year-over-year basis from the $844 million recorded in Q4 of 2023. Gross profit was up even more substantially, by 88%, moving from $133 million to $250. Net earnings, meanwhile, improved by 69%, going from $80 million or 18 cents per share in the fourth quarter of 2023 to $135 million or 31 cents per share in Q4 of 2024. Adjusted net earnings improved less dramatically, moving from $108 million or 25 cents per share to $157 million or 36 cents per share. Adjusted EBITDA, meanwhile, grew from $336 million to $524. Cash provided by operations saw the largest improvement of all metrics, moving 163% from $201 million last year to $530 million this year during the fourth quarter. For the full fiscal year, revenue hit $3.1 billion, above guidance that had an upper end of $3 billion. Gross profit improved 39% year over year, moving from $562 million to $783. Yet net earnings were down by 52% year over year, falling from $361 million or 83 cents per share to $172 million or 39 cents per share. On an adjusted basis, net earnings were down 24%, dropping from $383 million or 88 cents per share to $292 million or 67 cents per share. The decline is said to be related to the impact of purchase accounting in relation to the acquisition of Westinghouse. Adjusted EBITDA, on the other hand, was up 73% year over year, thanks to a large contribution from Westinghouse of $483 million, leading to adjusted EBITDA moving from $884 million last year to $1.5 billion this year. Cash provided by operations was also up a fair bit, climbing from $688 million to $905. Cameco ended the year with $600 million in cash and cash equivalents, and $1.3 billion in total debt after having paid down $400 million in debt during 2024. Post-year-end, the company paid a further $200 million down on debt, while extinguishing a floating-rate term loan. Cameco also notably increased their dividend back in November to 16 cents, with a further 4-cent increase earmarked for both 2025 and 2026. All right, if I know anything about uranium investors, they're probably itching to learn about the segmented results, specifically uranium production. 2024 was a good year for Cameco's uranium division, with production hitting 23.4 million pounds, a 33% increase over 2023, and a beat in terms of guidance, which had called for production of 23.1 million pounds. The beat was due to record annual production from the Key Lake Mill, where production hit 20.3 million pounds on a 100% basis, setting a new record for global uranium operations. Cigar Lake, meanwhile, produced 16.9 million pounds on a 100% basis, falling short of guidance that suggested 18 million pounds of production. Average unit cost of sales for 2024 hit $59.47 per pound, which was in line with guidance. Unit costs increased 11% on a year-over-year basis from $53.41 in 2023. Sales volumes for the year, meanwhile, came in at 33.6 million pounds versus 32 million last year, with the average realized price increasing to US $58.34 per pound, up from $49.76 a pound in 2023. The average spot price, however, was at $85.14, demonstrating the impact of long-term pricing contracts with somewhat unfavorable pricing terms. Guidance had called for 32 to 34 million pounds to be sold in 2024, putting the company above the midpoint of guidance. The difference between production and sales figures is related to 11 million pounds of uranium that was purchased, including a contribution of 4.4 million pounds from the Inkai joint venture consisting of production from both 2023 and 2024. Those 11 million pounds were on average purchased at a price of $74.86 a pound, which is substantially higher than the average selling price. But as most of our viewers know, this is nothing new for Cameco at this point. The segment as a whole was responsible for $1.2 billion in adjusted EBITDA for 2024. Fuel services, meanwhile, saw production volumes of 13.5 million kGU, in line with guidance of 13.5 to 14.5 million kGU for 2024. Sales volumes totaled 12.1 million kGU, in line with guidance at an average realized price of $37.87. The segment saw revenues increase 8% year over year, while adjusted EBITDA was down 12% from $164 million to $145. Finally, the Westinghouse segment saw revenues jump from $521 million to $2.9 billion, while net earnings fell from a loss of $24 million to a loss of $218 million. Adjusted EBITDA improved from $101 million to $483 million. While the losses are large, the segment appears to be on the upswing, with Cameco this month receiving their first $49 million distribution from the segment, which is the first distribution received since the transaction closed. Okay, so the outlook. On a year-over-year basis, things are expected to stay, pretty flat. Production is expected to again hit 18 million pounds at both Cigar Lake and McArthur River/Key Lake, which is the same guidance that was given for 2024. Attributable production, as a result, is expected to hit 22.4 million pounds in the uranium segment, while the fuel services segment is expected to see production of 13 to 14 million kGU. Market purchases will be up to 3 million pounds this year, up from guidance of 2 million last year, while committed purchases is flat at 9 million pounds. Sales and deliveries are expected to be 31 to 34 million pounds in the uranium segment and 13 to 14 million kGU in the fuel services segment. Consolidated revenue, meanwhile, is expected to grow slightly to a range of 3.3 to 3.55 billion, which is a result of averaged realized prices expected to hit $84 per pound. Unit costs, meanwhile, are slated to be between $59.50 to $63 a pound. Finally, capital expenditures are expected to total $360 to $400 on a combined basis. The only guidance for the Westinghouse division, meanwhile, is that adjusted EBITDA will fall in 2025 to a range of $355 to $405 million. All right, so let's wrap it up. 2024 was a good year for Cameco. As Scotiabank said, the company released better than expected results and guidance was in line with expectations. Raymond James basically agreed with the sentiment. Bank of America thought guidance was slightly below expectations, but was still positive. But you can't fight the tape. Red Macro described it best. Earnings don't matter when there is negative sentiment in an overpriced valuation. And with projections for energy demand shattered by the rumors of DeepSeek running on basically no compute, well, it doesn't exactly bode well for sentiment. All right, everybody, we are in the thick of earnings season. Last time we covered Cameco, you guys seem to really like it, so we're going to keep covering Cameco. If there's other names you want us to cover, we will bring that for you guys. We're doing this for you guys. We keep getting all these really positive comments, and guys, I really, really appreciate that. I send them out to our whole team in screenshots just to make sure everybody sees it, because I know everybody's working hard to deliver this content for you guys. It's a whole team effort here. And it means a lot to us, all the nice comments we've been getting, and we're going to keep delivering for you guys. So if there's other names you want us to cover, let us know in the comment section. Otherwise, thank you for watching. And if you haven't, please hit that like button. Thanks, everybody.